Wednesday, we have plenty of data, minor data coming from Europe. I don't believe it's really relevant, neither Chinese one. I'm convinced that the focus will be in the UK employment figures, right? And let's see what we can get from there. But it's expected modestly better, okay? Although I'm a bit concerned about average earnings being expected below previous readings, right? Um, I really believe that these numbers need to be better than these expectations and better than those previous numbers to actually trigger a pound rally. Okay, industrial production in the euro area is also relevant, but not that much, not enough to wake up the euro. Okay, and as of Thursday, the day starts with employment in Australia. You know, it's quite interesting, at least for those who trade in Asia, because it's usually setting the tone for all of the session. And for mayors during such session, it of course affects mostly the Aussie, but it also affects the New Zealand dollar, and we will probably consider Canadian dollar replicating the moves of those other two because they are all commodity related currencies. Anyway, retail sales in the UK are at August data. Sorry. Ever since Brexit, we have really tapped in on the small data coming out in July, and a sort of an improvement in August because a cheaper pound has fueled sales, inflation, and so I would expect retail sales for August to be in expectations to be a bit better than what we are seeing in this forecast actually. So hopefully that will also boost the pound. Of course, if the numbers are amiss, that will deny the theory that the August data will result to bidding because of a cheaper pound, and that the economy will grow because of a cheaper pound, and that Bank of England quick decision to act was the reason why the avoided the economic chaos. So that could be really, really negative for the pound, and we may see it heading back towards 130 during the upcoming days, particularly if we have a miss in employment and a miss in retail sales, of course. The Bank of England, it's up next, expected to remain unchanged. So not much of an event is here. The market will be looking for clues on whether Carney uh, uh, wants to do more in the future or not, and will trade accordingly, right? But honestly, we're expecting them to keep everything unchanged, as you can see in here. In the US, retail sales will be really, really relevant, although we are not expecting much from this. I would recommend you to take a look at the control group because it's usually moving much more the market than the rest of the figures. Its market is beginning to be more sophisticated when it's trading fundamentals. Somehow it's paying more attention to core data, to the numbers that are um, neat, right? And are telling us the longer term rather than monthly number or than just what's going on right now. It's trading accordingly, much more accordingly to what the future may bring than what to what actually is happening right now. Producer price indexes is also relevant for me. It will help us to determine whether if inflation in the US continues to be low, a much better than expected number here is needed to boost the greenback. Okay, and for Friday, the main event will be really inflation. I would love to see this core monthly inflation number being well above the zero point 0.2, near 1.0% would be the glory for the greenback. If, of course, the rest of the number go ahead with it. Okay, uh, and consumer sentiment is also relevant for me to watch on Friday because it's also going to show us, sorry, how the health of the US economy is going on.